All right, Bryce. Well, before we get to Kieran, let's talk about NVIDIA, a company that really needs no introduction.
No.
Yeah, but,
Stock of the year, potentially. 2023.
in terms of best performer,
Well, just like, it was hard not to miss.
in the vibes.
It was hard to miss.
In the zeitgeist.
In the vibes.
Yeah, definitely. All right, well, for people who weren't paying attention, what is NVIDIA?
So, Ren, it's a software and fabless company which designs graphics processing units, otherwise known as GPUs, application programming interface, APIs, for data science and high performance computing, as well as systems on a chip unit. SoC is the acronym there for mobile computing and automotive markets.
Automotive, even.
Automotive markets.
You did pretty well to get most of that out. Just stumbled at the last
Long
hurdle.
story short.
What does it actually do?
So they design the most cutting edge computer chips, and then they sell that design to the likes of TSMC, who then go and make those computer chips.
Yeah, I think
I don't know if this
to nitpick, they don't sell that design.
True.
But TSMC, Taiwan Semiconductor Manufacturing Company, and Samsung, and are like some of the big actual chip
Customers.
makers. So they have the multi-billion-dollar fabrication plants. But NVIDIA, AMD, a lot of the big tech companies will design chips that then get made. And NVIDIA design the best chips.
By far and away the best chips.
They're kind of like the Red Rock Deli of the chip market. not my best. So to give people a bit of history, NVIDIA was founded in 1993. One of the co-founders is now the quite high-profile CEO Jensen Huang. Not sure what his other co-founders are doing. Probably still involved.
Yeah.
Just less famous.
Very much
You better
less
not
famous.
do. You better not do that to me one day.
You better not do it to me.
But for a lot of people so I was born in 92. You were born in what, 91?
91.
NVIDIA was born in 93.
Yes.
And I think growing up as computers sort of came of age, people probably came across NVIDIA in gaming, often credited in the most famous games because they had a real strength in computer graphics and the hardware to generate cutting edge graphics. And that was sort of how they came up. They had a massive contract to win in the 90s to make the hardware, the graphics cards for Microsoft's Xbox. And like that was a big inflection point for the company. Then they became really synonymous with like PC gaming. And I think around the time we started investing, they were the leaders in PC graphics, still are. But AI is the story of today.
Absolutely. Now, if we're talking about history, do you know what NVIDIA stands for?
Oh, this is great. No, I don't.
Some people...
Hold on. Is it a full acronym? Like NV?
No, it's not.
I was going to say that's a big acronym.
Yeah, it's not. The history of it is that initially the company had no name, and the co-founders, who you've just spoken about, named all their files NV, as in next version. But when they came to incorporate, they needed obviously a name. And so it prompted them to think about NV and review that against, I guess, different languages. And it's come out that NVIDIA in Latin means envy. So that's how NVIDIA came to be. And now it's just NVIDIA. I know, not as grand as you would think.
Yeah. So, I think to give people some context on the NVIDIA story today and just how central it is to, I guess, this AI revolution we're going through. So, NVIDIA's most cutting edge computing unit, their most cutting edge GPU is the H100.
Yeah.
There is a 6-month waiting list for an H100, at least 6 months. These units sell for between $25,000 and $40,000 US. And now here's the trivia question, which I've already asked you. So
I'll play dumb.
Yeah. How much do you think it cost them to produce an H100 unit?
Less than $5,000.
Yes. $3,300 is the estimate. So they make it for a bit over $3,000. They sell it for $40,000, and there's a 6-month wait list to buy it.
It's unbelievable.
That's a pretty good business.
Yeah. Because of how significant they are, there's a bit of geopolitics around all this, isn't there?
Yeah, there is more with the fabs, more with
Right,
the TSMCs and the
makers.
like. Yeah.
But didn't the US, this is going off track a bit, but didn't the US try and ban exports to China of these chips, and China just tried to start buying them up in bulk?
So yeah, two separate geopolitical issues. One is Biden banned the cutting edge semiconductors going to China, which is NVIDIA and a few other companies. You're right. And then the second geopolitical issue is if you look at where the West gets their semiconductors from on a map, it's Taiwan and Samsung. Taiwan and South Korea. I was jumping ahead. Samsung based in South Korea, TSMC based in Taiwan, both on China's doorstep. Both rely on trade routes and waterways that go very close to China. And so because of that, there's now a big push in Europe and in America to build fabrication plants at home. So yeah, a lot of geopolitics. To give you a sense of how important semiconductors are, when COVID broke out in 2020, it originated in Wuhan. Wuhan is the center of China's semiconductor industry. Every business was forced to shut down to contain the spread, except the semiconductor business.
Wow.
Because China has a lot of catching up to do, and it's critical to their national security to catch up.
Didn't the Saudis also put in an order for billions of dollars worth of these H100s?
Yeah. So there's some you see a lot of AI companies raise big rounds of venture capital. The majority of it is to go into hardware. Yeah.
Well, also the $10 million paychecks that we spoke about.
Yes. It's a bit different, but anyway, there's this argument that NVIDIA is funding a lot of startups, but it's really just like a pass-through cost for them because they'll put $100 million into a startup. 90 million of that will come back in orders for H100.
Very smart.
Anyway.
So, yes. Well, let's look at how the stock has performed because it's been pretty phenomenal. So for 2023 year to date, it's up 240% at the time of recording, which you can't complain about. It's up 1,000% in the past 5 years and up 10,000% since 2014.
Yeah, wild.
Sheesh.
Yeah.
That is unbelievable. 10-bagger in 9 years?
All it makes me think is in 2014, we were in the share house.
Yes.
You were in Cockle.
Yes.
We were together in 2015.
Yeah.
But 2014, we were both living in Canberra in share houses. Both would have been playing FIFA and the like on Xboxes, which would have been using NVIDIA's graphics cards.
Yep.
If we had spent less time playing the game and spent more time figuring out how the game was made, we could have had 100-bagger in less than 10 years.
Yeah, we might not be here.
True.
It might be somewhere else. Anyway,
phenomenal
for performance.
You can reminisce about that
same with Bitcoin.
Bitcoin, yeah.
It trades at a 120 price to earnings ratio. Pretty expensive. So the question becomes, and we'll ask this to Kieran in the second half of this, can it grow into that valuation? Yeah.
The two big questions for me are, can you justify the price? And can it keep its competitive advantage? Because it's kind of pioneered this industry, but all eyes and all effort is really focused on this AI industry at the moment. Can NVIDIA maintain its lead? We're not going to be able to answer that question, but hopefully Kieran can.
Well, Ren, on that cliffhanger, let's do it. Let's bring in Kieran to get the expert view on NVIDIA, the bull case, the bear case, how to analyze it, and then what it could look like in 10 years. We'll be right back. We're here with Kieran Moore from Munro Partners. Kieran, welcome to Equity Mates.
Thanks, Bryce. Thanks for having me.
So to kick it off, a company that we've many people have heard of this year, NVIDIA. Help us understand what NVIDIA do.
Yeah, so look, NVIDIA plays a super important role in the production of the world's most advanced semiconductors. So when we think about the world moving into what is going to be the AI phenomenon, so i.e. individuals, businesses all around the world using artificial intelligence day to day, a critical enabler to allow those applications to happen is NVIDIA. So they make the most advanced chips in the world, or they design the most advanced chips in the world to effectively power a lot of these AI applications that we're going to interact with in the future. So the way we think about it is that the semiconductor market is going through what we think is the start of the fourth era. So you've had effectively about 50 years worth of semiconductor market growth from effectively a nascent industry to about $500 billion in value. So it's gone through what we've called the mainframe era to start with, the PC era, the mobile era, and now we think the semiconductor market is going to go into the AI era. And that's going to effectively double the size of the market, so take it from $500 billion to $1 trillion industry. But the really exciting thing for investors is that it's going to take it from $500 billion to $1 trillion industry over the next 10 years, not over the next 50. So that places a huge growth and huge demand on all the producers of semiconductors. And NVIDIA is really at the forefront because they design what are the most technologically advanced semis in the world, or GPUs in the world.
Yeah. So we'll get to the bull case and then the bear case in a little bit. But before we do, let's just talk about how you approach a company like this. What are the metrics that matter? And as an investor, how are you approaching it and analyzing it?
Yeah, so look, we take a really, really simple approach to our investment philosophy, and we're always focused on earnings growth. So we're big believers in earnings growth driving stock prices. And if that earnings growth is backed by a structural tailwind, i.e. the shift to AI, or that semiconductor market going from $500 billion to $1 trillion in value, that's going to underpin the earnings growth for NVIDIA for a long period of time. So let's get into it. I mean, maybe when we think about NVIDIA's opportunity here, when we think about AI, it's all going to be powered, at the moment, it's all powered at the data center. So the data center is the critical piece of compute infrastructure that's going to allow us to use those applications. What NVIDIA do is they design chips to go into the data center. And so data centers all around the world effectively have to be retooled to get them ready for the AI era, if you like. And so NVIDIA reports its revenues in 4 segments, but ultimately that data center revenue is what's most important, and that is obviously going to translate into earnings growth over time. The way we like to value, or the way we think about what potentially the long-term opportunity is here, is we always like to see the ability of our companies to at least double their earnings over a 5-year period. And that's what we think NVIDIA can do.
So it's obviously had a phenomenal year. And as you said, is in an industry that is super important for the next phase of technology and AI. How what's the bull case that underpins your investment thesis, and how is NVIDIA, I guess, maintaining a competitive advantage over its competitors?
That's the key. Yeah, that's the key. So this is where the data center roadmap becomes critically important. So Jensen Huang, who's the CEO, co-founder of NVIDIA, he has told us on earnings calls that ultimately the key use, or the key driver of the data center in the future, will be AI. And so what we need to do is, as I said, make sure the data center is ready to, I guess, allow for the compute power that AI is going to demand. So when we're watching Netflix and we're being recommended different shows, or we're playing a video game and it's live and there's different scenarios and all sorts of different things are happening based on where we are and who we are and what we're interacting with, all that compute power is interacting with the data center all the time. So it's going via the cloud, back to the data center and back to you. And so ultimately what needs to happen here, and where NVIDIA is critically important, is that they provide a solution which is called accelerated computing. So what accelerated computing means is that instead of using what's called a CPU and a GPU sort of in isolation, i.e. a central processing unit and a graphics processing unit, ultimately what NVIDIA does is combine those two things together into effectively a total solution. So what you used to happen, Bryce, is you would request a piece of information from your computer, and the computer would process that in a fairly linear, straightforward way. So you'd request information, it would process that information and sort of give you an answer or give you an outcome. With AI, if you think about that Netflix example or the video game example, there's thousands of different outcomes all the time. So the compute power required here is structurally different, if you like. And so we can't just continue to use that form of linear compute power at the data center. Data centers around the world need to adopt this form of accelerated computing. And so in accelerated computing, which is combining those two pieces of technology together, ultimately NVIDIA has about a 70 to 80% market share in that. So they're by far the leader. And what the roadmap is here is that, and this is what Jensen's talked about, is that there's effectively been roughly about $1 trillion worth of spend on data centers in the last 4 or 5 years.
Wow.
And the portion of data centers today that adopt this accelerated computing is only about 14%, 14%. So in our view, the way we look at it is that we think that 14% clearly has to go higher because we know that the data center is critical for AI. And so if that 14% goes to say 30, 40, 45% over time, then that gives NVIDIA a long runway for it to grow into its earnings. And so that will underpin those earnings for hopefully, a number of years as this opportunity plays out.
Is that not priced in at the moment though?
Yeah, tricky question. So what's happening at the moment is that there's been a massive acceleration in demand in AI, right? So if you think about ChatGPT took 5 days to get to 1 million users versus Facebook that I think took 10 months off the top of my head. So there's been a massive acceleration here. And so all these companies that are creating this compute power, providing the data center infrastructure, which is Microsoft and Amazon and Alphabet and Meta, they're accelerating their demand for NVIDIA product, effectively. So what's happened is in this year in particular, a lot of that demand's been pulled forward and we've seen their revenues explode. The question the market is grappling with, and to your point, it's the right question, is that if you have all this demand pulled forward, then is there a year where that demand or that revenue growth sort of slows down as you sort of absorb that demand into the market? We've got a lot of confidence in the 5-year runway,
right,
but over the next sort of 1 to 2 years, does the market need to absorb all that revenue that it's pulled forward? That's sort of the question at the moment that the stock is sort of grappling with, and that's what we're grappling with at the moment.
Well, isn't there like a natural limit on how much revenue it can pull forward, given that there's 6-month waiting list for its key products?
Yeah, so capacity becomes a really, really important question. And so what, again, coming back to Jensen, what he's talked about on his most recent earnings call is that they're increasing their capacity to be able to deliver on this revenue all through next year. So all through their fiscal 2025 year, which for us is calendar 2024. So they are investing in the ability to produce these GPUs and sell their product to their customers. But that capacity becomes a critical question. The other way to think about, whether it's all in the stock at the moment, coming back to your question, Bryce, is, if we think about NVIDIA today at a roughly $500 stock, we think next year the company is able to produce $20 in earnings per share. So if you think about that $500 divided by the $20 in earnings, that implies a PE of roughly 25 times, which we don't think is super expensive for a company that has a 70 to 80% market share in this market and a long runway of growth over the medium term, despite the fact that we've seen all this pull forward in the stock this year in particular. So that's the alternative.
So NVIDIA's earnings per share at the moment, I'm just looking it up, $4 is in the last 12 months?
So in their fiscal 2023, which is effectively the calendar year that's finished, so they reported $3.30 in earnings per share. That is going to go up significantly this year, clearly, which we've all seen the revisions. And next year, so 2 years on from that report of $3.30, we think it could be $20.
Yeah, right. Well, that's growing into your multiple. Okay.
Yeah.
Yeah, right. I mean, if that happens, that's pretty phenomenal. Because you think about the share price, it's up 240% this year. We were pulling it earlier, up 1,000% in the past 5 years, up 10,000% since 2014.
Yeah.
If you 100 bagged a stock in less than a decade, you've done very well. It's crazy to think if it then from $3 to $20, it 6x's its earnings in 2 years. Like,
and this
the
is the
hype
power,
is going to be crazy.
This is the power of the structural trend behind those earnings. That's why, that's what we love to see when we go and try and find these sorts of opportunities. When there's a structural tailwind behind the earnings power of the company, then the market often misprices the growth in that earnings.
So I think that the question for me, like, there's you don't have to convince anyone in this room or anyone listening that there's a massive AI tailwind at the moment. The question for me is around sustainable competitive advantage, because NVIDIA were the market makers, they were first movers, they sort of ushered this era of compute in many instances, and you said they've got, 70 or 80% market share at this point, but there are competitors, and there's going to be more people looking. AMD is always spoken about, but it seems to be a far behind second place. But all the big tech companies are looking at designing their own stuff as well. So how do you think about sustainable competitive advantage, and so they can capitalize on these tailwinds? Yeah,
that's really important. So at the moment, as you say, they've got a strong lead in what they do. We actually assume in our model where we forecast the earnings forward 5 years, we actually don't assume they hold that market share. Oh, okay. We actually assume it comes down a little bit because, to your point, there is naturally going to be more players that enter this space. And AMD is working on their MI300, which they expect to ramp up next year. And I think as far as reports suggest they've got a few $1 billion of orders next year. That's been the commentary around the market at the moment. So there is more product coming to this space. And I think it goes back to your earlier question, which is around capacity, right? So if capacity is so constrained at the moment, I think it makes sense. And what these hyperscale data center cloud providers need, the Microsofts and the Alphabets and the Metas, they need more supply from other companies. So I think it's only natural that we will get some more competition in this industry for these products. And so we factor that into our long-term forecast, that market share does come down a little bit. But I don't think it derails the potential for NVIDIA to really double that earnings over the 5 years.
Wow.
Yeah.
So when it comes to the bear case, when you're listening to the earnings calls, what are you watching out for? And I guess what do you have as red flags that could go wrong?
Yeah, so at the moment, I think it comes back to that question you asked earlier. So the market is grappling with, yes, that earnings has gone from sort of $3.30 odd to about $20 next year, we think. The question then is, what happens after that 20? Does it do $21 or $22, or does it go back towards sort of $15 to $18? That's what the market's grappling with at the moment because the demand has been pulled forward. We've got a lot of confidence that the long-term power of the earnings is going to be more towards $40 over time, but then there might need to be that digestion year. And so we're really focused on the commentary around potential digestion in the industry. The growth rate in the data center revenues for NVIDIA that we've seen explode this year is naturally going to sequentially decline a little bit next year, or it's going to slow. It's going to decelerate. That's only natural as we get, as that $30-40 billion business goes from 30-40 billion up to 70, 80, 90 billion over time. So that's going to be a normal, course of law of large numbers, if you like. The other thing we're watching really closely, and this is a sort of more anecdotal data point, but it is really important at the end of the day, is are individuals and businesses actually using AI applications?
Good call.
Are they actually using it?
Is this a fad?
Are they? Well, we don't think it's a fad, but are they willing to pay more?
Yeah.
So are you willing to upgrade your Microsoft subscription to include Copilot going forward and pay that extra monthly subscription, or upgrade your Adobe to include Firefly and things like that to get the benefit of the AI, but also you have to pay more as a customer.
Yeah.
So we want to just track that usage and make sure that people and businesses are actually using it. Because NVIDIA is really right at the start back here of the AI opportunity, and it flows all the way through to obviously the end user. And so if the end user's not getting any value and not willing to pay for it, then the demand profile that NVIDIA sees, might not need to be as big as we think. So it's not a quantifiable measure, but it's something that's really important for the industry.
Yeah, I'm just trying to think. We have one person in the team here who pays for ChatGPT Pro, like the premium subscription, but I don't think she's getting a lot of use out of it. I dabble in ChatGPT, but I don't think it adds a lot of value at this point beyond a Google search. I know this is just a poll of one, but yeah.
I think the integration into other apps is, I think at this stage, it just doesn't feel like it adds a whole lot.
Yeah, like Canva, we use Canva a lot, but the AI tools, we don't really benefit. Well, it's a good question. Now you've got me really thinking about
if you
that.
think about, what we do as fund managers, we scour these company reports and we read the 10K, the annual report when they come out, and look for bits and pieces of information. And so what we can in theory do is feed that annual report into a ChatGPT or into an Adobe AI product or potentially a Google Bard type product in the future, and ask it to distill that annual report, which might be 100 or so pages, down to 4 or 5 key issues. And so that sort of use case, I think, in an industry like mine is going to be pretty important.
Yeah, but then your edge gets arbitraged away, Then punters like Bryce and I can do the same thing that you guys do.
That's when we need to make the critical decisions.
That's it. Yeah. AI won't be able
points.
to do that.
Yeah.
Yeah, it is fascinating. So I guess, long term, thinking about NVIDIA, we've sort of spoken about, where the industry is going. But for NVIDIA in particular, if it can execute on what it's trying to do today, but also what it's trying to do over the next decade, what does it look like a decade from now?
Yeah, so where we see this going is that NVIDIA is, again, coming back to Jensen, he's a bit of a visionary, so I keep referring to him. He's talked about effectively NVIDIA providing the total solution here to power the AI opportunity. So what that includes is, as I said, the accelerated compute, the GPU, CPU together, and then ultimately that's going to progress into providing software solutions as well. And so where we see this going long term is hopefully that growth at the top line is going to be still, really strong. But ultimately what we would expect to happen in the long run is that NVIDIA will involve what will become more relevant in the revenue base is a more software-driven business. And therefore you get that, slightly higher recurring revenue portion in the business, and the margins should go up as well. So that's where we see the business growing. I mean, it's obviously not going to probably do those, $3 to $20 type years in the future, but we see a really sustainable path for them to develop more of a recurring revenue type model over time.
You've mentioned Jensen a couple of times there, and I think most people now would be familiar with him, if for nothing more than photos of him wearing his leather jacket seem to pop up on social media every now and then. How critical is he to the thesis at this point? I think he did an interview recently where he said if he had his time again, he wouldn't start NVIDIA because of how hard it's been. Like, if he decides, I've built a great business, I'm built a close to $1 trillion company or $1 trillion company.
Just over.
I am a multi-billionaire. I'm good. Yeah. And if he, passes it on, does the company survive him, or is he still key to that investment thesis?
So what we always look for when we look at any stock, whether it's NVIDIA or a healthcare stock or an industrial or anything that has that structural growth opportunity to it, we love to invest in businesses with founders. Yeah. I think having the founder still involved and still a big shareholder, so he's super, super aligned with the investors at the end of the day, is critical. So a guy like Jensen or a lady like Jensen or whoever it is in that founder seat, in that founder role, can think much more long term about their business. So they don't just give you that sort of quarter to quarter, let's beat and let's get expectations right. They think about their business over a 5 to 10 year view. And so having him there is really, really critical to us. And the way we think about having a founder involved is that we include that in the price we're happy to pay for the stock. So we include that as one of the characteristics we look for when we're setting a multiple that those earnings should trade on. So ultimately we set these price targets. Price targets are formed by earnings per share, and then you've got to put those earnings on a multiple. So if we have a business where there's a founder that's highly aligned and has a long-term track record and has a good stock holding, then that for us leads to a slightly higher upgrade to the multiple we're happy to pay for the stock versus a CEO that might be your classic corporate finance sort of CEO. So I think it's a great point. It's an underappreciated point with the company, but it is really important.
Yeah, I like that. That's just a neat way of you factor it into the multiple.
Yep.
Yeah. Great.
Love it.
NVIDIA, it's every company we speak about here, we say we'll be watching it and see what happens. NVIDIA will be a company no one can avoid. So everyone will be watching it. Hopefully you're right.
They actually report earnings next week. So hopefully we get some more positive commentary out of Jensen and some more confirmation that this roadmap is really playing out.
Yeah. And for context, we're recording mid-November.
Yeah. So by the time people are listening, they'll be able to go and look at the commentary.
Yes.
Yeah.
Fill in their models.
Yeah.
Well, Kieran, thank you so much. It's been an absolute pleasure. Always love getting you guys from Munro on the show, and we do appreciate your time. Thank you very much.
Thanks, guys. Thanks for having me.